Now, how many of you guys remember for the past 6 months now, I've been talking about this aggressive end of the year rally? Hopefully a few of you at least. Well, starting this upcoming week, the rally begins. Okay, there's a couple definitive points we're going to point out, like the VIX versus the VIX EQ, which is actually a brand new VIX index, if you will, or ETF that measures single stock volatility. Single stock volatility is going to collapse this week after earnings, and that is going to fuel risk on behavior. See how it works if you're unfamiliar. A lot of hedge funds and institutions, once risk goes up, they have to start selling stocks. They have to start hedging portfolios. Okay? It's just how it is. That's why a lot of hedge funds underperform, because how stupid is this, right? The lower stocks go, the more you sell if you're a hedge fund. Okay? It should be the opposite. It should be the lower stocks go, the more you buy. That's not what happens. Okay? So we're going to break that down and how that is a definitive sign of a large rally coming. Now, there's a lot of news we're going to cover as well. Canada is done running their Ronald Reagan tariff ads that had Trump pissed off on Friday. Trump actually canceled trade talks with Canada. Now, we were reacting to CPI that was better than expected, in which we predicted on this channel. I thought there was no way that Trump was going to put out a bad CPI report when he didn't have to. Shout out to you guys if you were watching those videos and you profited from that information that I provided. But nonetheless, it looks like we're about to get back to trade talks with Canada. We're also getting news that trade talks and discussions between the US and China in Malaysia today were quote unquote very constructive before Trump and Xi's meeting over the next week or so. I think that's going to have a positive impact on markets this week, but it's really about earnings. It's about the Fed. It's about de-risking. And I think this leads to a very strong rally in markets, a very strong AI-driven rally that, well, you need to hear this information. So we're going to get into all of this in today's episode. Hit the like button as well as subscribe to the channel. That's all I ask. Free 99. Cost you absolutely nothing to do so. Check that link out down below in the description of this video. You know, I bought APLD at $3. Today it's $35. I bought Navitas Semiconductor. A lot of people love that stock now. I bought it when nobody knew about the company at $1.50 to $2.20. Today it's $17. I bought Nebius at $22. Today it's $125. It recently was $144. I bought Palantir at $10 on IPO day. I bought IONQ at $7. Okay. I want to be early to quality companies in the next bull market, which is AI. Okay. Quantum, robotics, you know, biopharma as well. We don't just focus on AI, but these are areas that are going to be in a bull market for the next 10 plus years. And if you can spot the companies that Wall Street is overlooking, like the names I mentioned, and invest in those early, you're going to get stupid rich. Okay. And that is what we are doing in the trading community. We have collectively identified like 20 different stocks that offer very compelling longer term opportunities. So check it out, link down below if you guys would like to come join us, and let's get into today's episode. Now, in broader market news today, China has rewired its financial system, allowing it to trade globally without relying on the US dollar. But look at this headline. This could be a market mover on Monday. It says the United States and China trade talks were very constructive, per Reuters. This headline here says US-China trade talks in Malaysia deemed constructive. The United States and China held trade talks in Malaysia on Saturday, described by a U.S. Treasury spokesman as, quote, very constructive. The discussions ended for the day and will resume Sunday ahead of a meeting between President Trump and Xi in South Korea next week. So it is very possible that there is some kind of ending to some of the recent trade tensions we've seen between the U.S. and China ahead of that meeting between the presidents of both countries. Okay. And it wouldn't surprise me if Sunday we actually get a readout of some kind of deal, right? That would be very, very positive for markets, and I would expect stocks to do very well on that. Trump was asked if the U.S. plans on striking inside of Venezuela. He says, quote unquote, "we'll see." Now, this was big news last night. I actually shared this to the trading community, but Ontario to pause the Reagan tariffs ad after Trump terminated Canada trade talks per CNBC. So basically what happened, if you don't know, Trump said, yep, we're done communicating with Canada on trade, period. Like trade talks canceled, trade deal canceled, because the Ontario Premier, Doug Ford, started running ads of Ronald Reagan saying that tariffs are bad, that tariffs do not work, blah, blah, blah. They were spending like $100 million on these ads too, by the way. Like it was basically like trying to get Americans to push back on the tariffs, right? That was the idea, like to turn the population against Trump. Trump didn't like that, so he canceled the trade talks with Canada. Well, now Ontario will be pausing the Ronald Reagan tariff ads, and it sounds like maybe that's the concession that Trump wanted to get back to, well, getting a trade deal done with Canada. And Donald Trump says he will be discussing Taiwan during his Asia trip with the Chinese president. And I've been curious about this for a while now, in regards to Trump's White House ballroom. I was wondering, like, who are the people donating for this? Okay, apparently it's Apple, Google, and Meta, of just to name a few, are providing funding for Trump's $300 million White House ballroom. And OpenAI has reportedly been taking steps to develop an AI that generates music, per the information. Now, the United States of America was downgraded to AA- by Scope Ratings. This is not one of the major rating firms, not like Fitch or Standard & Poor's or Moody's. This has to be like a third tier rating agency. I've honestly never heard of them. This came out at 6:58 p.m. yesterday, so futures were still open and it did not move anything. And the U.S. military has accepted a private donation of $130 million to help pay troops during the shutdown, per the New York Times. The CNN Fear and Greed Index to close out Friday ended at 33. This is just to show you, like, sure, indexes are at all-time highs, but there is a lot of volatility still under the surface. We talked about this in some of the prior videos, but if you look at VIX EQ, which is the VIX for equal weight, basically looking at single stock volatility, it is still at like 40. The high recently was 43 and some change, like 44. 66 was the high. The high back in April was 70. If you look at the VIX, okay, the VIX is high. Let's pull it up. The VIX is high back in April was 52. And the VIX recently hit a high of 25. It's back down to 16.37, back down to basically where it was before all of this started, right? You're basically back down to like trend, okay? Back to where you were in July, August, September, as markets were doing well, okay? As the internals of our markets were doing well. AI was doing well, like everything. But look at single stock volatility. It is still very elevated. Like, to get back to where the VIX is essentially today, you'd need to get down to like 31 to 33. So you still need to fall like $7 minimum on the VIX EQ just to get back to a similar level of where the VIX is. Okay. So what does that mean? It means this week, Wall Street is looking at a lot of single stock volatility. That is what has made Wall Street quite nervous recently. It's about the mega caps and their AI spending. For whatever reason, Wall Street's a little nervous that CapEx budgets are going to be cut on AI. And that's simply not the case. Okay. People are still supply constrained on, GPU power, right? We've heard that on CNBC for the last 2 or 3 days. These hyperscalers, they're not going to slow down their AI CapEx spending. They cannot. Okay. It is a fight for survival for most of these companies. And it's a fight to hold market share for the rest of them. CoreWeave and Nebius and Applied Digital, they're coming for Microsoft's business. They're coming for Oracle's business. They're coming for Google's business and AWS's business. Okay. AWS, Microsoft, Google, they got to keep building, AI tailored data centers because, yeah, they have a lot of old data centers that are not purposed for AI. So they're continuing to build out. Everyone's continuing to build out. And there's so much demand for, these AI data centers. It's going to be like this for years. Okay. Just look at the AWS outage we had, right? You had Snapchat. Like as Snapchat adds more AI features, as Snapchat adds more users and more people using their features, they're going to need more AI compute, right? Again, and that was just AWS. Imagine everyone else that is building out these AI features and people that are adopting them more and more, and the kind of, compute we're going to need. We're going to be AI training compute or GPU constricted, I should say, for a long time. I think next week we're set up for a massive rally in markets. The equal weight VIX is going to collapse. Okay. As earnings show that things are good, as we get back to trade talks with Canada, as China-US trade tensions get resolved, hopefully by Sunday. But most importantly, earnings come in good, and the Fed, we get a rate cut, end of QT. Like the VIX EQ is going to come down, and that's going to fuel a broader market rally. Again, back to the CNN Fear and Greed Index. You're at 33, not because the S&P or the NASDAQ. Again, S&P, NASDAQ, they're at all-time highs. You're at 33 on the VIX. You're not even to midpoint of fear. You're still on the low side of fear or high side of fear. Because internally in this market, there has been a dispersion where, the high flyers, the momentum stocks have got crushed because that's the area that gets crushed first before big tech. Okay. But I think as the volatility calms down next week, you're going to see the CNN Fear and Greed Index go back into neutral or greed territory, and you're going to see a very broad-based rally. Okay. Now, market momentum is greed. Stock price strength is fear. Stock price breadth, extreme fear. Put and call options, fear. Market volatility is neutral. Safe haven demand, extreme fear. Junk bond demand in extreme fear as well. If you take a look at the AI Investor Sentiment Survey, we did get a new one on Thursday that actually showed bearish investors fell a little bit from 46.1% down to 42.7%. Okay. Neutral investors rose a little bit from 20.3 to 20.5, and bearish investors or bullish investors rose a little bit from 33.7 to 36.9. But you still have more bears than bulls. That's a green flag. This market is going higher. Same with the CNN Fear and Greed Index being in fear still. And another green flag would be the VIX EQ being so high. Again, relative to the VIX being back to where it was in September. But the single stock volatility, very high. That is a sign you want to be buying the shit out of this market. Now, the percent of stocks trading above their 50-day moving average is up a little bit. It was up 3.5% on Friday to 52.4%. So you're back to like a midpoint, which this isn't telling you a whole lot. It's not a super strong market, but it's not a super weak market either. Okay, now tomorrow we're going to be going over all of this in a little bit more depth. But again, what I really want to highlight is single stock volatility is really high right now. Again, just to point this out, the VIX EQ, equal weight, okay, is at 40.17. To get back to where it was September 2nd, it would have to hit 33. So it'd have to drop about $7, okay? Let's look at the VIX. The VIX today is at 16.37. To get back to where it was, on September 2nd? September 2nd, the VIX was at 17.17. The VIX was almost $1 higher on September 2nd than it is today. So again, there's not a lot of nervousness in the broader indexes, but there's a ton of nervousness in single stocks. Okay? That is because of earnings, my friends. That is because people are nervous about the AI story, as they always are when it comes to earnings, right? Lately, that is. Everyone's nervous that Meta, Microsoft, Google, Amazon, blah, 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 they're going to lower their CapEx budgets for AI, and it's the end of the AI trade. That's simply not the case. You can look at CNBC. Like, just look at CNBC television. Look at the clips they post, okay? I've watched like 5 clips now of people in the inference industry, right? CEOs that run data centers and so on and so forth, saying, hey, we're going to be supply constrained for, a long time. Okay? For years, we're going to be supply constrained into the future. Okay? The CapEx budgets are not going away. So just to highlight the big ones here, and there's a ton of them. Again, we'll highlight this in more depth. The ones that I also think are important besides just the hyperscalers and big names tomorrow. But you have Meta, Microsoft, and Google, or Alphabet, Wednesday and after hours, and then Thursday and after hours, Amazon and Apple. That's it. Once you get through these stocks, you're going to be more than 50% done with S&P market cap weighted earnings. After that, the rally is on. Now, there's also a lot of nervousness and hedging in single stocks and overall volatility in this market because of the Fed coming this week. Okay, the Fed is going to be taking place on Wednesday. Okay, you're going to get the Fed rate decision at 2 p.m. and then at 2:30 you're going to get the Fed itself. Okay, I cannot stress this enough. The Fed is going to cut rates. The Fed is going to be dovish. Okay, they're obviously going to say they're attentive to inflation risks and blah, blah, blah. But JP Morgan expects the Fed to end quantitative tightening this week. Okay, what that means is the Fed is no longer going to be selling assets from their balance sheet onto the market. Okay, which basically, if you don't know, like treasury yields, for an example, right? Treasury yields are the function of price versus a fixed yield. So bonds actually are a fixed yield, right? The price of bonds fluctuates, and that's where you get the interest, okay, or the percent, right? So 10-year bonds, 4%. The Fed has been selling a bunch of bonds, so the price of bonds has been falling, which has kept 10-year treasury yields higher. As the Fed stops selling those bonds, that's less selling pressure. Maybe bond prices can start to rise and bond yields come down. Okay, that's the simplest way that I can explain it. It works like a dividend stock. What happens if people start selling a dividend stock but the yield stays the same? The price of the dividend stock falls and then the yield goes up. Okay? Even though the company didn't change the yield, just like the government doesn't change the yield on bonds, the price of the stock or the price of the bonds changes, which changes the yield. I know it sounds complicated, but basically the Fed ending QT, very bullish. The Fed giving us another rate cut is going to be very bullish. The hyperscalers reiterating that they're spending like crazy on AI reiterates and reinforces this end of the year rally when a lot of people are nervous, guys. A lot of people are nervous. And honestly, this to me looks like the most clear-cut situation we've had in a long time. Like the last time I was this confident that markets were about to go through a very large rally over the next 3 months was when Trump said to buy stocks in April. Trump said to buy stocks. That meant you should have been buying stocks. But right now, when I add all of this together, like you could not convince me otherwise that stocks are going to crash over the next 3 months. Okay? Unless something crazy were to happen, which is unforecastable. The obvious next leg for this market is higher. And I think a lot of the momentum stocks, a lot of the AI stocks are going to lead that way higher. And I think that's where the opportunity is right now in this market. Even if we get big tech earnings and the big tech names sell off a little bit, as long as they don't say anything bad about AI, it's game on for this market. It's game on for these smaller cap AI stocks, the ones that we talk about on this channel on a daily basis. So let me know your thoughts on all of this down below in the comment section. Let me know where you are investing your capital right now and your thoughts over the next 3 months. Again, I think we're going to have a very strong rally into the end of this year, but I also think 2026, things are going to get pretty damn euphoric. Okay. So let me know your thoughts on that. Check that link out down below in the description of this video if you want to come join the trading community. But with that said, ladies and gentlemen, have a great weekend, and I will see you in the next one.